Thanks for joining. Before we get started, please click subscribe to my channel and check out a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, multifamily real estate has been a pretty hot sector or a subsector of the real estate industry for the past couple years. And one of the biggest players in the space is Avalon Bay Communities, ticker symbols AVB. They specialize in, the simple term is the expensive markets. They specialize in New York City, Boston, DC, San Francisco, Southern California. And the last year was really good. Their FFO, funds from operations, essentially the REIT version of earnings, was up about 19% year over year. Their same store revenue was up over 10% year over year. Same store rent growth was up 9% year over year. I rented apartments for probably about 10 years in my 20s and 30s, and my rent never increased by 9% year over year. So that's pretty staggering rent growth, especially for apartments that were already expensive. So, Tyler, I noticed that they're not really predicting to have the same kind of year in 2023. Do you kind of take this as a red flag or a kind of return to normalcy?
I'm going to call it a return to normalcy. For 2023, they're guiding for FFO per share growth or funds from operations per share of about 5.9%. And this is coming off a year of 19% growth. And so as investors are looking at this, we'll call it one of the rookie, amateur, novice mistakes, I guess you could say, is kind of looking at what happened last year and saying, what if it does it again? This is going to be great, right? Well, management is telling you it's probably not going to happen. If you're guiding for 5.9%, it's considerably lower. And it should certainly go into your investment thesis. And that's where, for an investor, there's the separation, right? Is whether the business is good and whether the price of the stock makes sense right now. Now, Avalon Bay as a business is a very good business. Like you said, multifamily residential apartments in, the fancy management term is gateway cities, which is basically mean the high rent cities across the United States. It's a good business to be in. It's a resilient business to be in. But now let's get to talking about what we can expect for a stock, right? So today, it has a current dividend yield. When you include the dividend yield to its FFO growth, this is a very much like a layman's way of valuing your growth or estimating your growth, right? Like FFO growth plus your dividend, that's kind of your return, right? If you were to add those together, it's right about a 9% return right now, annualized. And that's if everything goes according to plan. To me, that doesn't necessarily translate when there are other opportunities out there that look a little bit more attractive, right? You could see as little as a 7% return based on some of that guidance they're giving. And with higher interest rates, I can get a treasury bond at like 4%. That's not the most attractive return right now. And that's kind of like where you as an investor can really separate yourself between not just analyzing the business versus analyzing the stock and wanting to commit new money to the stock. Like I own Avalon Bay, and even though I saw these numbers, I'm probably still going to hold my position. But based on this, I don't know if I want to add to my position.
Yeah, I got to tell you, one of my mentality changes that I'm starting to notice as we go into 2023 is I'm starting to question my investment thesis entirely if it's a stock that I don't want to add to. There's an old saying in poker, which I know you've mentioned in another. You mentioned poker in another video. There's a saying in poker: if your hand's not good enough to raise with, it's probably not good enough to call with. So I kind of am starting to think of stocks in the same way. In that if I'm not willing to put more money into it, and I have money sitting there, is it really worth holding on to? So, but with Avalon Bay, it's a stock I don't own right now that I've been kind of on the fence about for a long time. It's one that I personally like, and every time I see a good opportunity, I talk about it on a show or write about it, and then I can't buy it, and then it goes back up. So yeah, I'm sure you've had that issue before. So these numbers are impressive. I think there's a chance that Avalon Bay does have a surprisingly good year. And the reason being is that we're seeing a lot more return, like a delayed return to office in some of these markets, particularly New York, San Francisco. And a lot of that is creating more like new demand for apartments. I think the office, and it's still kind of in flux. A lot of companies are still kind of figuring out where office work fits in their long-term plans. I think that could be a nice catalyst for the multifamily space in some of these larger cities. But at the same time, how much of that rent growth has already been pulled forward in the past couple of years? So that's kind of, I'm kind of in wait and see mode right now. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.